The market made a pretty weak attempt at bouncing today with a SPY up 0.53%, closing at 558.87. The rally over the last couple of days leaves much to be desired, with the lows being reached on this recent sell-off yesterday morning. We are still firmly in negative gamma exposure territory, with the zero gamma all the way up above the 600 strike. The largest gamma exposure is at the 550 strike, with more negative gamma exposure growing at lower strikes. The downtrend line off of the recent highs could serve as potential resistance somewhere between the 575 and 580 level over the next couple of weeks. But looking at our gamma exposure data graph, the only issue I see with a potential bounce heading into the March 21st expiration is that the options chain and the GEX data is still skewed to the downside. We see gamma exposure growing at some of these lower strikes, and every single bounce thus far has been really weak. So although our expectation is that a bounce is coming, the probabilities for this being any more than a dead cat bounce are getting really small. Moving over to our 3D gamma exposure surface model, if we remove the negative gamma exposure that is rolling off today here at the 558 strike, the next largest negative gamma exposure concentration is at the 560 strike, targeting the March 21st expiration, and we can see most of the gamma exposure for the March 21st expiration is all negative, concentrated between 550 and 573. And so this 573 does correspond with that downtrend line that we saw earlier. However, we would still likely be in a negative gamma exposure environment even if we did bounce up to the 570 to 575 level. Moving over to the Qs, we see we had a pretty nice move today, up 1.13%, closing at 476.92. The six largest gamma exposure concentrations are concentrated all around this 480 to 475 level. We highlighted the 480 level yesterday, and we nearly reached that level this morning around 10 a.m. I will say the thing that I don't like about these gamma exposure concentrations all surrounding one or two major strikes is that this tends to be representative of a consolidation or a pause move rather than a reversal signal. From a technical standpoint, I would be looking for a break of this trend. So if we do see a big thrust up and breaking this trend closer to a close above the 480 to 485 zone, somewhere in here, that would actually start to get interesting from a technical perspective. And especially if we see gamma exposure shifting higher at that point up the options chain, that could be a temporary relief to the sell-off that we've seen. I don't expect that that'll come before the March 21st OPEX, but it is something that we are watching closely. By the way, we do discuss these trade setups as well as the moves we're making in our own portfolio every single trading session in our community Discord. Definitely check that out when you get a chance. Link in the description below. Moving over to Bitcoin, we talked about this yesterday, a potential double bottom here just above the 75,000 strike. Still hanging in there under 85K. That is our zero gamma exposure level, and so this would be another interesting factor moving back into a positive gamma exposure environment if we see Bitcoin, which oftentimes will lead equity markets, especially risk-on assets. And so a couple of days of closing above the 85,000 level could be interesting for a continuation move to the upside. We still have the largest gamma exposure concentration at the 100,000 strike. I do think there is a high probability that we get back to that level within the next couple of months if bullish momentum comes back into the market. So that is something that we're keeping an eye on. I think this 85,000 level is the key though. We're bumping up right against it. Let's see if we can make a move above that level and close above that level for at least 1 or 2 days. In terms of the VIX itself, we highlighted this in yesterday's video. The fact that the VIX moved lower yesterday while the market also moved lower was a little bit of a divergent signal. We saw the VIX continue lower today, down 10%. Even despite the market's soft upside. The largest gamma exposure concentrations for the VIX are all lower, both positive and negative. We measure the three largest positive concentrations and the three largest negative concentrations, and those are all lower. And so it's no surprise that the VIX is coming back down to this level because this was a fairly extreme move in relation to the options chain itself. It's pretty amazing to me that the VIX has been in such a steady uptrend. You typically don't see that on the VIX, but basically over the last 3 to 4 weeks, we have been in this solid uptrend, just market marching higher. And so I think that's an interesting point where we close today. And I actually think a breakdown below the 23 level could see the VIX retesting the 20 strike. So those are basically the next two levels that we are watching on the VIX. The 23 level, which is the most recent support, as well as the 20 level, which is the following support, both large gamma exposure concentrations. Next, let's take a look at a couple of names that had some huge moves today, starting with Tesla closing at 248.09, up nearly 8% today. Big move, even though it looks like nothing on the chart because the downtrend has been so dramatic. In our video a couple of days ago, we highlighted the gamma exposure concentration at the 250 and 260 strike as a possible target. If we did see a bounce in Tesla, the move down into the 220s did seem a bit extreme for us. Ultimately, we did get the bounce over the last couple of trading sessions, but we're not getting too excited yet as Tesla's got a long ways to go to make up for the dramatic reversal we've seen over the last couple of months. We do still have large negative gamma exposure at the 200 strike as well. I do see a little bit more upside, potentially up to the 260 level for Tesla. That's currently where the largest gamma exposure concentration is sitting. We see volume coming in at some of these higher strikes. I'm guessing that's market participants making bets to the upside because the move has been so dramatic. So even a mild dead cat bounce could easily see Tesla getting back to the 300 strike, and we'd still be below this downtrend line. Next, let's take a look at Nvidia. Nvidia also huge move today, up 6.5% nearly, closing at 115.74. This is a position that we're trading in our own portfolio, which, as I mentioned, you can follow along in our community Discord, link down in the description below. But Nvidia still got a long ways to go to get back into comfortable buy the dip territory. The largest gamma exposure concentration still at the 110 strike. It didn't quite make it down to this 100 strike there. That's also a large negative gamma exposure concentration as well. But you can see market participants are not afraid of going out and up in the options chain. We're continuing to see big volume up from the 115 all the way up to the 150 strike. Some of these bars don't look like very much, but this is 100,000 contracts, being traded today at the 140 strike, for example. So big volumes being traded in Nvidia, as is usually the case, and market participants are not afraid to make bets as well as sell premium at some of these higher calls. So the distribution of gamma exposure highlighted by these purple bars here really shows the potential of an upside move. So typically in these type of environments, the way we like to play for a potential upside move is with an asymmetric risk reward strategy. That's something like an out of the money call debit spread, for example, buying the 125 strike and selling the 135 or the 140 strike. So playing for a potential move up into this zone typically has a low relative cost associated with it with a high reward, sometimes 4 to 5x. And so these 4 to 5x type of plays, if you exercise proper position sizing in your portfolio, can really make some nice speculative type positioning in these type of scenarios where you see deep sell-offs and gamma exposure growing at higher strikes. These are the type of strategies that we employ in our portfolio using gamma exposure and portfolio management strategies. And if you're interested in accessing our gamma exposure dashboard and our option flow analytics tools, head on over to geeksoffinance.com. We also just rolled out our algorithmic trading strategies, which you can see directly in our charts along with the gamma exposure data. We are running a special promotion, $300 off our yearly portfolio manager tier subscription. Use code SPRING2025 at checkout. We have a few spots remaining, so definitely take advantage of that while you can. Members also get access to our community Discord. As I've mentioned a number of times, you can follow along with all the moves we're making in our own portfolio, and we've got a ton of great traders in there sharing their own trade setups and strategies as well. Link down in the description below. Thanks so much everybody for watching, and we'll see you guys in the next video.